Real estate or businesses? Which one should you buy? Which one should you invest in? I've made a lot of money investing in real estate, houses like this that I buy and I fix and I flip for more than I paid for them. I also have made a lot of money buying businesses, which I buy and maybe fix up, spend a little bit of time in, and then sell those. Which one's right for you? Here's what's interesting. This looks like it's just a door, but it actually opens up into much, much more than that. Real estate investing and business investing is like that too. You're never exactly sure what you're going to get, but you'll always be surprised, and if you do it right, it's going to be a good surprise. So what's it going to be? Business or real estate? Well, let's kind of explore some of the qualities and characteristics of each one, and we'll figure out which one might be right for you. So just so you're clear, real estate is any kind of physical property or a right in the physical property. It could be a house, it could be, that's a residential property, it could be commercial, it could be like an apartment building or an office building or a strip center or something like that. And typically your investment in it is going to be with the desire to make money either passively through having it be rented, ideally through a property management company, or maybe it's kind of quasi-passive, you're gonna rent it out yourself, or maybe it's gonna be an active business where you're actually acquiring it, fixing it up and flipping it or wholesaling it to somebody else. Businesses, on the other hand, come in a few different varieties. They come in for-profit and non-profit. So you can have a business that's designed to make you money, or you can have a business that's designed to do some good in the world. The ones that I tend to focus on for business, for me, are profit-making businesses. And just like real estate, businesses can be acquired at a discount and then built up in value and sold. And just like real estate, that can be done actively or passively. Passively as an investor, like when you buy a stock on the stock exchange and that business is operating and it goes up in value, you didn't have to do anything for that. Maybe you get dividends from it. That is passive. Active is going to be when you're actually working the business in terms of either growing the value so that you can sell it for more, or simply owning it and working in it to make a piece of the profit that it earns. So which one are you going to pick? Are you going to pick business or are you going to pick real estate? Well, a lot of it is going to depend on this. What are your financial goals? Let's talk about that a little bit. And what might you choose based on these characteristics? Well, first off, a lot of people say real estate is passive. And the truth is that real estate isn't usually passive for all of the people that tell you to invest in real estate, because they're asking you to go out and find properties. That takes work. They're asking you to invest in those properties and fund them. That takes work to find the financing. They're asking you to fix them up. That's a heck of a lot of work, and you probably don't even know how to do it, or you've got to oversee contractors and figure out how they're going to do it. Then you've got to market and sell the property. It's a lot of work, right? It's not necessarily passive, but it can be. Maybe you're just going to acquire the property and take rents for it. So I would say real estate can be active or passive. And one interesting thing too is, depending on who you talk to, 90% of the wealth in the United States and the world has been created in real estate over time. 90% of the people on the Forbes 500 list have made their money owning businesses. Which one's true? I don't know. I think they're probably both a little puffed up, but let's take a look. So we've got real estate can be active or passive. Business can be active or passive too. Remember, if you invest in the stock market, you're an investor in businesses. If you're buying businesses to own them and work in them, or to build them up in value and sell them, then that's going to be an active thing too. But either of these can be active or passive. So if your financial goal is based on working in something or not working on something, either of these might be right for you. All right, so now let's talk money, right? Money. So real estate is generally considered less liquid than a business. Why? I don't know. I'm not sure I completely agree with this, because there's a ready market for real estate. It's called the MLS for residential properties, and there's a commercial market and commercial brokerage services too. So you can sell real estate, and it just depends on what kind it is, right? And what the demand is for it. If you're land banking, you're just buying a bunch of land out in the boonies, hoping that the city's going to grow that way, you'll be able to re-entitle the land, get it zoned differently and sell it. That's a long-term play. But real estate can be a short-term play by simply doing wholesaling, right? Wholesaling is where you acquire a piece of real estate, the right to buy a piece of real estate, and then you flip the contract to somebody else. And there are lists of buyers. I actually own a company called Real Estate Worldwide where we sell information on who are the people that are paying cash for properties. If you get a property under contract, and I've done this by federal expressing contracts to a whole bunch of people, and then getting the people that sign those contracts. I've never seen the property. It's subject to inspection, but they sign the contract. Then I send the contracts to people that are cash buyers, and then they buy the contracts from me, $20,000, $30,000, $40,000, $50,000 profit. It takes about 5 days, right? That is fast, okay? So I would argue that real estate investing can be fast or slow, liquid or illiquid, depending on what you're doing and what your plan is. If you're going to build a subdivision, it's illiquid for a long time. If you're going to flip a contract, it's instantly liquid. In terms of, that's cash flow. In terms of net worth wise, real estate for building net worth, the ability to get a big bump by buying something at a huge discount or changing the type of real estate from something that's, say, zoned agricultural to zoned residential, and creating lots, dividing those and selling them, putting in water and sewer and that kind of thing, that can be huge, huge increases in value. Over here on the business side, we're going to look at this, and it says more cash flow. So how does that relate to liquidity? Well, if the business is operating at a profit, then you're going to have cash flow. That makes sense, right? Whereas real estate, if it's just raw land and it's sitting there waiting to be developed, there is no cash flow. But what if you take that land and you rent it out to a Christmas tree seller or a pumpkin farmer or a rose seller at Valentine's Day? There are all ways to turn this into cash flow. But businesses are generally operating on the reg and generating cash flow consistently. In terms of net worth, businesses can be bought low and wholesaled to other people for higher prices. That's not a problem. You can simply find people who are buying businesses like that. We do this with private equity quite often. We'll find somebody who's an owner-operator, we'll acquire that business, we'll put in a professional management team, instantly increasing the value about 150%. Then we'll flip that business to a private equity company that's paying about 7 to 10 times what we buy the business for when we find it. So there's a lot of ways to manage liquidity and manage cash flow and net worth increase with both of these. Again, just like the first category, they're about equal. It just, in this case so far, it just depends on what you like better. Okay, so now we get to the third category. So now we're going to be looking a little bit at risk and growth kind of at the same time. So steady growth in value of real estate over time has appreciated. The last studies I saw say that real estate investors are typically who are holding for a long period of time through peaks and valleys are basically going to end up with somewhere between 8 and 11% return on their investment. Real estate investment trusts, typically 11 or 12%. The others just kind of depends on where you are and how hot the area is that you're growing. If you're in Detroit, probably less growth. If you're in Austin, probably going to do pretty good. Also, in terms of risk, real estate, generally, I hear that they're not making any more of it. So unless you live in Hawaii and there's a volcano putting lava into the ocean and creating more land, they ain't making no more land. So there is a limited supply and the risk is not that great. But look where we are right now in the real estate cycle. Real estate values have almost doubled where I am over the last 6 to 8 months. That's crazy. $3.5 million houses selling for $7 million in the markets I invest in. So to me, the risk of investing in real estate here in that market right now, I think is very great. But there are other parts of the country where we're buying single family homes that are significantly less risky because the values haven't increased that much. So hard to say, just depends on where you're investing. But if you're not comfortable with risk, the one thing you can do with real estate is hold on to it forever, and it will never go out of business. It will never stop being real estate. That's a difference with business because businesses do fail. Remember, 90% of businesses actually ultimately fail that get started up. Now, there's not as many failures of businesses that you acquire, which is why I prefer to buy ongoing businesses, but there is more risk and they aren't terribly liquid unless you have them and unless you hold your ownership in the business as stock in a publicly traded company so that there's an exchange and buyers and sellers. There's not like a ready market for businesses. And as a matter of fact, 80% of businesses that get listed for sale never end up selling. So we definitely have more hold risk. Also, unlike real estate, these can go out of business, right? They can cease to exist. The real estate's not going to ever cease to exist unless you're in California when the earthquake comes and the continental shelf falls off into the ocean. So I think this is a good point of differentiation, unlike the first two categories. I like real estate for less risk. I like business for the ability to get tremendous growth, but I think that the winner here is probably real estate between the two, honestly. So now we ask ourselves, how much time do I have, and how much time is it going to take to do this real estate and business investing? And again, like with all the other categories, it depends, right? I should go into politics. It depends. So real estate, a lot of arguments will be that it takes more time. But again, as I mentioned a few minutes ago, you can wholesale flip contracts to acquire real estate. And that is a way to do real estate fast. You can acquire real estate and not fix it up at all, provide financing, sell notes. There's all kinds of ways to monetize real estate. So is it more time? I mean, it just depends on what you're doing. If you're building a subdivision, if you're land banking, it's going to take a long time, right? But it can be instantaneous. Business is similar. Now, business will generally get you cash flow faster unless you bought a real estate rental property, in which case you'll have instant cash flow as well. Business is generally faster if you're going to build it up and sell it. Oh, but wait, you can do the same thing with real estate. So honestly, between the two of them, I think that this is equal and that these are equal, and we just get down to risk. And the risk, I mean, depending on how you're thinking and what the context of the situation and the location and the industry and all of that is, these ultimately can be about equal too. So with the exception that most real estate never ceases to exist, I'd have to say that we're kind of even in which of these things you should do. That's why I do both. That's why most of the people I know that are very successful do both. I believe that you should have a diversified portfolio between real estate and business. I think that's really smart. And typically because sometimes these things move counter-cyclically, right? So if it comes down to you've got to pick one, I would say pick which one is the most interesting to you. Because if you pick what's interesting to you, you'll be willing to go through the challenges and the hard times, because not all this stuff is as easy as you might think it is. It's not particularly hard, but it requires persistence. And it's easy to be persistent when you like something, and it's really hard to be persistent when you don't really give a crap about it, right? So you got to pick the one that you like the most. But both of them are absolutely fantastic ways to build income and to build wealth. Okay, so we talked about the differences and the advantages and disadvantages of investing in real estate versus investing in businesses. And the truth is, it comes down to you ought to do both of them. If I was going to invest in real estate, I'd look into some of the publications from my good friend Chris Crone. If you're thinking about investing in businesses though, I've got a wonderful book that shows you how to do it with no money out of pocket. Imagine investing without having to come out of pocket. If you click the link below, then you can get my book, which is called Zero Down, and I talk about all different kinds of ways to find businesses and acquire them without having to come out of pocket with cash. And so the best thing that you can do if you're thinking about investing in businesses is click the link below and get this book right now. Okay, so I've told you about the difference between investing in real estate and the difference in investing in business. What I haven't told you, and you'll never get from me, is to invest in the combination treadmill, keyboard, telephone, communications device, and weightlifting rack that I've got right here. This is something I've been working on, but you'll not see this on my channel. The only videos you'll see on my channel are things that are going to actually help you make money and do better at business. So what I'd like for you to do, if you like this kind of stuff, not this kind of stuff, but the other kind of stuff, is click subscribe to my videos so you don't miss out. You don't want to miss out. I'm going to talk about cool stuff. Why would you miss out? Click the subscribe button. Do it right now.